This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So I had a whole show planned for this week, but I threw it out the window as this short squeeze Wall Street Bets Reddit thing is going on, and it's going on with value stocks. Yes, value stocks. We're in the news for something that is kind of good or not so good. I don't know. It depends on your viewpoint, right? But many of those stocks are soaring as the short sellers are getting squeezed. There's option plays on all of them. The moves have been, dramatic. But a lot of the stocks that all of that is happening in have been mentioned several times on this podcast in the past. Most of them, but not quite all of them. But some of those include GameStop. We've talked about it many times over the last couple of years because it has remained a value stock for numerous years. Ticker GME, in case you don't know it. Express has been featured on this podcast over the years. EXPR, Bed Bath & Beyond definitely has over the years. BBBY. Might have talked about Tangier Factory Outlet. I can't remember if it was on this one or maybe the Market Edge, but that one, SKT is the ticker there. That is starting to see some big gains. B&G Foods is another one. I know we've mentioned that one. BGS is the ticker there. They're also squeezing some other stocks that were not been mentioned here. Build-A-Bear, BBW, SHAK, SHAK, is seeing a little bit of activity in that realm. So it occurred to me that after reviewing these lists of all these names, there's some more stocks, but these are just some of the main ones here on January 27th, 2021 that everybody's talking about. But I thought maybe some of you may actually be invested in some of these stocks, not involved in the option plays or anything that's going on Wall Street Bets, but you were just, bought in for a turnaround. Maybe you bought Bed Bath & Beyond back in the day, last year. That was a long time ago, back in the day. Or maybe you bought it when they got that new management that we've talked about. I used to own it in the insider trader because some of the insiders started buying once the new management came into place and started making changes and things started to improve. So we owned it in the insider trader for a while, but sold out with a very nice gain. But maybe some of you didn't sell it and you're still in there. And so I thought, well, what are those people doing? You may be sitting on a pretty big winner, or in the case of GameStop, a huge winner. So what if you had bought 1,000 shares of GameStop last year for like $5, and that would have cost you $5,000, but maybe you were thinking it's not as bad as what everybody's saying. Michael Burry was in there. Maybe you bought before the Chewy CEO guy, before he bought all that 10% position and put some new people on the board. Maybe, you're just a big fan of GameStop, so you thought it was a value and you were going to hold on. So while you're just sitting there waiting for the turnaround, maybe you were just hoping to double your money. So you bought at $5. Hey, if it goes to 10, that's a big winner. I just doubled my money. But then all this craziness happened and maybe you held on up through $50. So then you're at a 10-bagger stock and then you're like, should I be in there? But the craziness is still going on. We all get greedy. So let's just say you did hold on. And now here on January 27th, it's trading at $325 and you're still in it. So what do you do as a value investor? Like, you're an investor, not a trader. What do? You have this huge gain. It's now $325,000. And I've always said that all investors should have a plan. It gives you some control of situations when things seem to go out of control, right? And this is out of control in a good way, but it's still not expected situation. So you basically won the little lotto, if this is your scenario, right? And that's what they call that smaller lottery here in Illinois, although they did change its name to Lucky Day Lotto now. But most states have that lotto, right? They have like the big lotto, and then they have that smaller one that's a lot easier to win. But it usually starts around 100,000, 150,000, and then it goes up from there. But people win it all the time. And that's what this is. If you're winning 325,000, and I say that winning, if you have that now in GameStop, you just won the little lotto. And that can have a big influence on your life, obviously, because you have to ask, what was your plan? What were you investing for? And this type of event in something like GameStop is really a once in a lifetime type of event for most investors. But the harder trade is what to do with the other stocks that are up big in this whole event, but not as big as GameStop, because it seems pretty likely that many people either cashed in when GameStop went to 100, or they cashed in part, and now they're cashing in the rest of it at 325. I'm sure there's some who feel the greed and might stay in some part of the position to see if they can get a little bit more, but a lot of people are hightailing it out of there. So that's fairly easy. But what do you do if you're in, again, one of these other stocks that isn't up quite so big? So I own B&G Foods, again, ticker BGS, in the value investor portfolio here at SACS. We bought it last July 2020. It is a pandemic play because they're a food company. They own Green Giant, among a whole bunch of other brands, but their Green Giant division has been soaring during the pandemic. We're all stuck at home. We're all going to shop at the grocery stores because we're not eating out or even ordering in as much as we used to. And so now we're all cooking at home. And Green Giant has a lot of the frozen vegetables, fruits, and now they have a whole new line of frozen products that have turned out to be really popular, that a lot of consumers didn't know they had and now are enjoying them, like the cauliflower rice options. They have some that are sweet potato rice. They have a lot of the zucchini noodles frozen and things like that. And those little like hash brown things and the tater tots, those are all really good. But they've done a lot of food innovation along with a lot of the other food companies who are really seeing a lot of benefits right now. So that's their backstory. The fundamentals have been good. They've been cheap for this entire time, even as sales are surging. So revenue is expected to be up 19.5% in 2020 and only 4% next year in 2021, because everybody assumes, the pandemic will ease, and that was peak sales, basically. We're all still not going to cook at home. We're going to just go back to our old habits, although B&G Foods and the other food companies would say that some of the changes in behavior are going to be permanent. So they're not ready to say that it's all over for them and that they're going to go back to slower growth. But that remains to be seen. So we were just holding onto this stock. It does pay a dividend. And at one point it was well above 6%. And yeah, they can afford to pay it. They never cut it. And they do reward shareholders with that big dividend. It's still yielding 5.6% right now. And the stock is still cheap. It still has a forward P of just 14. But this week, when everything is going on with GameStop and the short squeezes, they have discovered B&G Foods as well. And this stock is now up 45% in just 1 week as well. Now, the portfolio at Zacks, we bought it again in July 2020. We're now up 67% with this week's gain. So you can see what a big move it has been for these shares. So again, if you're in this stock, what do? You're now up 45% in just a matter of a few days on no news. And it's a type of company that, yes, has growth and is well run. It's got that dividend. It's in an innovative area with this nice food innovation, but that kind of gains would not be the norm for this type of company. So do I cash in? The big gains may now be priced in here. Even if I'm a long-term investor, even if I'm expecting, oh yeah, I'm going to stay in this for a couple of years, it gets a little hard when you start to see, 50%, 100% gains in just like 2 or 3 sessions. That would be like several years gains for a stock like this. Another one to look at, I don't own this one in any portfolio, is Build-A-Bear, ticker BBW. It's up 60% in just one day when I'm recording this on January 27th. Express, EXPR, I mentioned that one. That one's up 244% in just one day when I'm recording this. So again, if you had just kind of bought Express hoping for some kind of turnaround there because it was, super cheap, or Build-A-Bear, it was under $5. I know a lot of you like to buy the under $5 stocks. I've done podcasts on that before. Maybe I need to do another one. I don't know. But we all get lured into those $2, $3, $4 stocks thinking, gosh, it doesn't take that much to go to $8, from 4 to 8, and I double my money. So, and in this case, some of these literally have doubled in just a day or 2 days or 3 days. And so you're sitting on these big gains. So again, I urge everybody to think about what was your plan. That's why it's good to have a plan. What are you expecting to get out of the company? And where do you sit with what the stock is doing? Because a lot of these moves are not quote unquote normal. And we may just go back to where we were prior to the moves at some point. So you have to ask, what is your point of owning it, and whether or not you do want to cash in some of those gains. Now, remember, I've said many times on these types of shows where I've talked about when do you sell, and nobody says you have to sell your entire position out. You can take half off. You can take a quarter off, whatever floats your boat. That makes you feel like, yeah, I'm cashing in some of this, but I still feel greedy and I still want to see if I could get even bigger gains. And that is an effective method for, locking in some of the gains. Obviously, you're not going to get quite as big of results at the end if you're locking in half and it keeps going up. But, from my point of view as an investor, the game is to have profits, and on something like GameStop, where it can be life-changing, then you have to really examine, actually taking a lot of it off the table there and celebrating your good luck, basically. So keep those things in mind. But this is an interesting time for value investors because, we were just supposed to be in a group where there might be rotation into our stocks this year, like there was at the end of last year, 2020, and that value investing may become a little more prominent, but not expected to be this prominent, right? With some of these stocks that have really been struggling, that are in a turnaround or that are in industries that are facing real challenges, like Tangier Factory Outlet. I'm sure many of you have been to one of those. Those are those outdoor outlet malls. And they've been holding up very well. There's been a lot of return in their foot traffic back to these malls. They benefited because most of them are outdoor type outlet malls. So even with the COVID restrictions and whatnot, consumers have not been afraid to go and hang out in these types of shopping malls. But they face challenges with some of their underlying retailers having gone bankrupt. So they'll have some empty stores that they have to release. Some of their retailers are behind in paying rent, but that has improved as we've gone along here. But there's some real challenges. Like a lot of these have these real challenges. So keep that in mind if you are thinking about actual fundamentals with these. You're not just buying to double your money. You are buying the business, underlying business. And I'm thinking of that a lot with B&G Foods. Like I said, I own it in the Value Investor. Right now, we are staying in it. They haven't reported earnings yet. I think it's towards the end of February is when they report. I love the business. I'm a big fan of it. It's just going to depend on what happens here with these short squeeze, option move type plays that are going on in it. But watching it closely, and you should be watching all of yours as well. So let me recap some of the tickers here. And we're going to keep an eye on this and might have to have some more podcast episodes about it. I'm not complaining that it's happening in value stocks. Like I said, it's about time some of us value people. We're in something exciting here, but it's something to keep an eye on. And so I don't think it's going to just suddenly end in a few days. So those tickers again, GameStop, of course, is GME. B&G Foods is BGS. S is in Sam. BGS. Build-A-Bear is BBW. Express is EXPR. Bed Bath & Beyond is BBBY. Tangier Factory Outlet, SKT. I mentioned Shake Shack. That's SHAK. SHAK. Shake Shack is one of those that's not a value, but it has a big short position in there. So I think that's why that one's on the move. And I think that was it. But a lot is going on in value. So we've got to stay nimble here, and we'll see what happens throughout this year, 2021. It should be an interesting year. So you want to subscribe to make sure you're getting all our episodes. We will have more episodes on value stocks as we go along. And who knows what else we may be talking about. So be sure to subscribe. You can get us on SoundCloud, but only with the Zacks Market Edge there. I know some of you have other platforms. So we are on Spotify as a standalone show. We're on Apple Podcasts. We're on a bunch of others. Just put in the Value Investor Podcast with Zacks or my name, Tracy Reineck, into Google, and you'll find somewhere where you can listen to it and subscribe. But be sure to, because I'll be back again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.